gold is breaking out now. We've had, well, since 2020, we formed a top, we formed this handle in the huge teacup that started in 2011. And even the handle looks like a teacup itself. Well, I think it's been because of the Fed and other central banks finally tightening policy after a couple of decades of very low interest rates, negative real interest rates, a lot of QE. So they stopped that. And then they started tightening, and they've tightened more than most people uh, imagined. Even me, I didn't think they'd get that much.
In today's episode, Mario explains the recent move in precious metals as gold just hit a fresh record high, breaking out of a range and showing strong momentum across all denominations. Mario talks about his insights and experiences with the world of commodities and presents the bull case for gold and silver. He doesn't talk much about silver in today's episode, though, as the focus on today's show is on the recent breakout in gold prices. Like, subscribe, and turn on notifications to let us know that you support us and to keep us motivated to do more videos like this, to bring you the most well-known precious metals experts that will help you navigate the commodities landscape. Now we'll show you more clips of Mario. Let's get into the video.
That you need to hold on to gold and silver is patience, of course. The other thing is emotionally, you shouldn't get exuberant. You shouldn't get also despondent on the other side when the dollar is rising or the price of gold is falling. And what's the reason why I've stuck with gold and silver for all these years? Well, it's very simple. As JP Morgan once said, gold is money, everything else is credit. And of course, gold is really not an investment because it's money, but in a fiat currency regime, when central bankers and governments abuse their power to create currency out of thin air and their power to borrow cheaply, gold acts like an investment because it goes up in value or the currency goes down in value. So I agree. In a perfect world, gold is just money. Investments are something different, or speculation, of course, like gold mining stocks. There's a lot to investing in gold mining stocks and silver mining stocks. You could have a raging bull market in the bullion, in gold and silver, and one of your companies could be, well, confiscated or nationalized, like I think Panama did with a big copper company just recently. So there's a lot to it. Yeah. But as I said, gold is just holding gold and silver becomes like a very good investment.
Now, Mario relates the recent price action in gold with the latest CPI reading.
Is that the CPI, which is what people call erroneously, not in my opinion, but it is erroneous to call CPI inflation. That was taking off. It wasn't transitory as they thought. And then you had other things helping prices higher, like geopolitical crises, which I won't go over here. And yeah, that's why gold, I think, stopped. Under 2000, it kind of held around 1800. Yes, we dropped to even above 1600 in the meantime. But what's happening now is I think the financial markets are forecasting that the Fed, not just the Fed, but all central banks, ECB, Bank of England, Bank of Japan. Well, Bank of Japan, they've been doing it forever. They're going to have to loosen policy. And we've seen that bond yields have come off substantially in the last month, and that helps gold because real returns on bonds are going to come down relative when you take account of inflation. And I think a lot of investors don't buy these CPI numbers. A lot of people hopefully are learning about what real inflation is. And we're going to look at some charts as well about monetary aggregates in the stock market and why the Fed and other central banks, they will have to accommodate, or else, things could get very precarious in the financial sector and the whole economy.
A gold expert has reported that the U.S. is on the brink of a recession without a soft landing due to the termination of fiscal stimulus. Economic indicators, including the recent steepening of the yield curve and the contraction of leading indicators in credit, strongly suggest a recession. While the Federal Reserve has temporarily halted interest rate increases, there's speculation that they may lower rates again, marking a crucial point for gold's momentum. However, doubts persist about a return to the old playbook of quantitative easing, as it could jeopardize the Fed's recently rebuilt reputation. Gold price catalysts, as outlined by the gold expert, include central bank buying and a potential reversal of the trend where Western investors have been selling gold ETFs. Notably, there's a significant divergence between Western and Eastern investor behavior, with the former experiencing consecutive quarters of outflows, while the latter, especially in Asia, continues to buy. The gold expert suggests that once gold reaches new all-time highs in dollar terms, a fear of missing out, FOMO, may prompt Western financial investors to re-enter the market, particularly through ETFs. In terms of gold equities, the gold expert differentiates between producers, royalty companies, and juniors. Gold producers are seen as generating decent cash flows and paying attractive dividends, while royalty companies are expected to fare well in a cash-starved environment. However, concerns are raised about juniors and development companies, with doubts about the return of risk appetite, even if the Fed lowers interest rates. The gold expert mentions a preference for mid-tier gold producers in the 100,000 to 300,000 ounce annual production range, highlighting undervalued companies that have delivered strong performances. However, caution is advised against taking on excessive risk at the current juncture.
Gold is breaking out now. We've had, since 2020, we formed a top, we formed this handle in the huge teacup that started in 2011. And even the handle looks like a teacup itself. Well, I think it's been because of the Fed and other central banks finally tightening policy after a couple of decades of very low interest rates, negative real interest rates, a lot of QE. So they stopped that, and then they started tightening, and they've tightened more than most people imagined, even me. I didn't think they'd get that much above 2 or 3%. But the thing, in a fiat currency system, you got to keep expanding the debt. You got to keep borrowing, or else everything collapses. And the other thing about the reason why I think the dollar and the euro and the yen and the pound are falling versus gold is that governments are still borrowing and spending massively, especially in the US, but also here in the UK, even in Germany. And that's inflation itself, all the fiscal spending. And people are realizing that with interest rates not really being in a good place. And what do I mean by that? Well, I think the bull market in bonds is finished. Yes, we have had a rally, but I think that's the other thing that gold is telling us, that to expect more currency debasement. And yes, they might be able to manipulate bonds lower, like bond yields lower and prices higher, like they've done in Japan. But ultimately, gold will tell the truth, just like it's told the truth of the yen. After all, JGB yields are really low, but the currency there is becoming, trashier and trashier by the day. And you just saw the chart of the price of gold in Japanese yen. So that's what I wanted to talk about today. Yeah, Rudy is hiding there behind the sofa a little bit, and he's got his piggy toy. He likes that.
What do you think of today's show? Are you staking gold like crazy at these prices, or are you just reaping the rewards and enjoying the fact that your P&L is on the deep green? Post in the comments section down below your total unrealized profit in gold. Thanks for watching the video to the end. You're the backbone of our success. Hit the like button, smash the subscribe button, and send this video to a gold bug that needs to add to his stack. And I see you on the next video.